Hey folks, how you doing today? It's July the 10th. I had a few trades today in my live account, so let's get to it here. And I'm going to show you playback of some of today's session. And I was quite conservative today. I only took 5 trades, so let's go over the Excel sheet real quick. You're going to see I had 5 trades, 80% win rate there, and one trade was a nice winner. I had one trade that was a loser. This one was an impulsive entry, and we're going to go over and look at that. And this is the kind of stuff right here that I'm trying to eliminate out of my trading. But it's kind of like having a beautiful collection of jewelry and then you're sifting out the ones that kind of don't fit in the pile. So that's the analogy I'll give for sifting out my trading. Now, today I noticed something different and I felt something different because yes, I'm gaining more confidence in my trading approach. I'm learning about times relating to when to not trade, when to be more aggressive, when not to, and just getting a feel for the overall flow of the market, right? Reading the tape. This is so important, right? The opportunity flow of the market. But the next thing in combination with this that is the most important is you need to be competitive. And this is what I've realized is that you need to approach the session saying losing is not an option. And I was doing that today, and that is all that I had on my mind. So I'm reading the tape in opportunity flow, but in the back of my head, I'm saying losing is not an option. If I'm going to enter a trade, I got to be damn well sure that it's going to be entering in my favor almost as soon as I enter it. And if it's not, I'm going to be happy to exit the trade for a break even or even a tiny loss. So like I told you in a couple of videos, I do have a stop always in the market, just in case the internet goes off or something. But again, my intent is not for that stop to get hit. So you're going in with that thought that I'm not in this to lose. I'm in this to make money. And at the end of the day, that's what it needs to be. Because if you're so focused on losers and this and that, then you're not going to make money. You got to be focused on what the goal is, which is to sit there and read the tape, be in the opportunity flow and make some freaking money. All right. So I'm slowly getting there, guys. I've been trading for almost 2 years and we're slowly starting to feel that flow that you need to be in. All right. So I stopped trading pretty early. I only took 5 trades today. And this is going to be the open here. And let's take a look at what happens on the open. You're going to see that the market moves up, down, undecided. Then we move lower, okay? So we moved lower from the 700s, and I didn't take a part in any of this. So a great move down. One thing I noticed about 5 to 10 minutes into the open is that the financial sector was straight up and the tech sector was straight down. So there we go with that rotation again. Definitely seeing money coming out of tech this morning and money going into financials. So that rotation was quite apparent, and the Nasdaq did in fact underperform the S&Ps this morning. So keeping an eye on those things are going to be crucial for understanding your probabilities of, like, if you're going to take a short, you want to short the sector that's underperforming, and if you want to be long the sector that's outperforming. That's just a general idea, okay? So the Nasdaq was underperforming today and we moved lower. So let's go ahead here and take a look at what happens. So you can see that we're trading lower. And again, the market does this all the time. I've seen this. This is a recurring pattern. So look at the market moving lower. We try to break to a lower low and fail, giving some confidence to bulls that potentially that could be our bottom. But again, because of how obvious that is on the chart, it's likely to fail. So if we see more sellers coming up near these high 80s, we're likely going to continue lower. So what happens is, if you just want to watch that, so we traded as high as almost 90, and the bulls are trying to push this, and then they're getting answered by more sellers. The battle, then we're trading back into the 70s. Under 75, I'd say, and we're trying for a lower low. So look, there's some momentum, and there we go. So not a bad short at this point. But you want to see how the bulls are answering. You see they're answering, and they're getting answered by more sellers. So that's not a sign of strength. Combined with the fact that this little tail is too obvious, you see how we're heading down to test it right now. 72, 73, and then we're trading lower. So again, boom, right there. And then you see the market's getting hit. Again, I've seen that pattern occur many times. Then again, look at that. Another bullish tail on that 30-second chart. And then what happens? Well, it gets tested. The bears are aggressive. So when the buyers finally arrive, they get to push this all the way back up here to 700 and higher. So let's see where I take my first trade. And you can see I was contemplating something here, but again, I wasn't ready to be too aggressive. I wasn't so convinced. I took a long trade here. Let's take a look at this long scalp right here. And you're going to see how the bears managed to push this down to these high 670s, and I'm watching the volume that's coming in on the tape at this point. You can see that we had a rally and now we're pulling back. So what's the most likely scenario? Are we going to have a higher low here, or are we just going to break to a lower low? To break to a lower low, the bears need a lot of volume and they need momentum. If we're not seeing that, then you're just going to see a bunch of retail trying to short this, and then they're going to get stopped out when we move higher. Let's take a look and watch this. And you're going to see how I'm not convinced with the sellers. Look at that buy momentum. And you're going to see me get long right here. So I got filled pretty up there, and as soon as I got long, I'm in profit because of that momentum. And I was kind of struggling to put in a sell. I don't know what I was doing there. Anyhow, I managed to sooner or later trail a stop, and then I think I got out break even or something, or a small profit. So let's see what happens. So I'm trailing a stop up, and then I'm out for a tiny profit. So again, not settling for any kind of behavior that's going to allow me to lose money. As soon as the trade's in profit, that stop goes in. I'm trailing that stop, and I don't care what happens. If the market decides to give me profit, it's going to give me profit. If it doesn't, I'm out. I have no emotional connection to these numbers on the screen. They simply tell me when to enter and when to not enter. That's it. You can see we managed to trade higher again, and we're slowly grinding, and higher low. And again, this trading range. So right here, I'm seeing this, and right away I know, okay, pump the brakes a bit. I'm gonna move myself to the right side. This is the rule of thumb for me. When I start seeing these tightening ranges and these kind of chop ranges, I'm gonna pump the brakes. I'm not looking to enter any kind of aggressive trades when I see this kind of action on the tape. So indecision tells me to calm down. All right, so you're gonna see me get long again one more time here, because again, I wasn't convinced with the fact of these sellers here. You can see how low this volume is. After a massive bear like this, it seems like the sellers are not sitting around here waiting to push this lower. Now, I was looking for a little scalp, potentially a pop over the 700s. So let's take a look at what I do here. I see some buy momentum. I decide to get long. I get filled around the 90 mark, and then already I'm putting in that profit. So look at this momentum. It's continuing, and I want to see us potentially push above these 700s. So you're going to see that we kind of get rejected a bit, but it's a little bit of a battle. So I realized that using a stop order is going to be the best way, because you can trail it as the market's giving you profit. You see that we're sort of getting rejected, but again, it's a battle at this point. So I want to see bull momentum. And again, it's not a great trade. So with this trade, I'm kind of front running the idea that the bulls are going to keep up that momentum and potentially see a pop over the 700s. So you can see that we're trading lower, but not seeing a whole ton of follow through into these low 80s here. So again, those sellers are weak, and then we see buyers come back to push this thing up, and right away I'm trailing the stop, trail the stop, trail the stop, and I get stopped. Boom. So for a nice little profit on that trade, probably about 4 or 5 points or something like that. So could have held it a little longer, but it doesn't matter. Profit is profit. Okay, so what happens after that is it gets rejected, so all the way back down to the range. And then sooner or later we're trading lower. Now the next trade, so now we're trading in the lower part of the range here. So the odds are higher that we break bearish, but that doesn't mean that you want to jump on every single short opportunity you see, because the NASDAQ in particular is one of the choppiest markets and the markets that fake out the most. So you got to sit there and be patient. Now this is an example of me not being patient. So yes, of course, we're in a demand zone. As long as this doesn't break bearish, we're still in a demand zone around the 60s. If you were looking at the tape here, here, and here, you would have seen that there were buyers defending that 60 zone. So what I did was I shorted right into that 60 zone. Very impulsive decision, not a great trade, and I got stopped out very quickly on that trade for my managed loss. You're going to see that. So I sold right there, and you're going to see a little bit of a battle, and the bulls are kind of pushing it back up to the 70s, and that wasn't a great trade at all. Jumped on it too impulsively. And that's exactly the kind of behavior I'm trying to get out of my trading. It's the kind where I'll jump on a short or jump on a long just because I think that we're going to have a break. And again, front running a break is a very dangerous trade unless there's something about the momentum and the clarity in the market that's telling you otherwise. So you can see here how we're trading back up to the resistance point. Now watch how the market reacts around the resistance point. You're going to see how we managed to trade higher. So again, we're just trading higher. I'm watching this. So we get some selling. There's some right there. You saw that seller momentum just smash this thing back down to 75. We were trading at like 86. Smash it right back down. Momentum picking up, and I'm seeing that momentum. The momentum's picking up. I get short right away as soon as I saw that momentum pick up. Now let's take a look at what happens here. You can see that momentum continue, and it continues, and I'm trailing my stop. We're pushing under 60, and that momentum is continuing. I'm trailing my stop. 56. Almost got stopped out there. So sellers are aggressive. We break lower. And there we go. Bunch of stops getting smashed. We're trading lower. I got my stop there. Trailing it. Seeing if we can get more sellers. And we're selling. And I'm trailing it even more. Now again, that's arguable, right? And I'm trailing it more. And I'm trailing it more. Got it at 50. Putting it in the 40s now. Market's giving me all kinds of profit. I'm locking it in. See that? And I'm out. Great trade. So I was trailing that stop. Now, I would argue that if you go a little further back, and you're going to see that this was kind of the same thing where I was trailing the stop and I almost trailed it a bit too quickly, because when the market breaks out, sometimes it comes back to retest a little bit, right? So you don't want to get stopped out on those little retests. So again, it's a debatable topic. It depends on how much the market's moving in your favor. If it shoots in your favor real quick, you probably want to trail that stop quicker. And if it's kind of inching its way downwards and potentially breaking below a key support, then you can kind of inch that stop and just keep watching the tape. Because in that case, you're going to see how we were chopping around those high 50s for a bit, and then the market continued to roll over, but slowly. And then once it hit these 50s, then it was a free fall. So again, it's a debatable topic, and that was it. So after that trade, I didn't trade anymore. You can see how we continued to trade lower for a bit and then traded back higher. And then sooner or later, once the NASDAQ caught some buyers, we rallied way back up. And that's the NASDAQ for you. So again, you can't be biased in these markets, guys. You can't sit there trying to short the thing. You cannot be biased in these markets because you're going to get wrecked. You get massive short opportunity, massive long opportunity. You have to be in that opportunity flow. The goal is to make money, not to be right, okay? Having trouble with these 690s. Sooner or later, we push above 700. And I wasn't really interested in trading any of this. I don't think I traded any of this afterwards. So I'm seeing this range, and right here, as soon as I see this tightening range, I decided to go for a walk, because this for me is not opportunistic. I don't care about these tightening ranges. I want to see a range potentially break, no follow through, that type of thing, you know. And then we have a bull break. All right, last trade was right around here. And you're going to see this. This is the kind of setup I see quite often where we have a bear or a bull, either one. In this case, it's a bear. And market rallies from this bear about 10 points, right? You can see we pushed all the way down to these 700s, and now the market's rallying. Volume's kind of light, and I'm watching how the buyers are reacting. I'm watching how the sellers are going to answer these buyers. So you have an initial rally after an impulsive move like that. So I'm skeptical about these 700s here, and I think that it's too obvious, and I think we're going to push down and test it. So we'll see if the sellers come through with any kind of momentum here. Watch these bulls. Not much. And I see the sellers are kind of trying a bit, and I think that was enough for me to get short right there. So I shorted it right there, started trailing the stop. I'm looking for a break under 700s, and then we get it. I'm trailing the stop, and I'm out for a little scalp. So nice little stop run type of trade, and I love those little scalps. And that was the last trade of the day. And then after that, we traded higher, I believe. There we go. So that's my trade review for today, guys. If you learned something from the video, leave a thumbs up. I'll catch you guys in the next video. If you have any video suggestions, leave them in the comment section below or send me an email. Take care. Bye.